High-risk investment. Trading on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading and seek advice from an independent financial advisor if you have any doubts. Market opinions. Any opinions, news, research, analyses, prices, or other information contained on this video is provided as general market commentary and does not constitute investment advice. Master the Markets will not accept liability for any loss or damage, including without limitation to any loss of profit, which may arise directly or indirectly from use of or reliance on such information.
Hello traders, and welcome to our live trading workshop webinar today. So today, those of you joining in new, the format that we usually follow is that the first thing what we usually do, traders, is that we look at some live trading potential trades. We had some actually on the cable earlier on before the news. I'll talk about that and what we're looking at doing on that again. And also the second thing is that we'll be going through the topic, okay? And the topic for today is quite an interesting one. It's in ahead of next week's federal rate cut rates, okay? Federal rate news on the FOMC, okay? On the meeting minutes on what they're going to do on the interest rates, okay? So we're going to be talking about that, the federal rate cuts, if it does happen, and should we sell the news or not, okay? So quite an interesting topic for today. And then the other thing also we're going to be taking a look at is the upcoming events from us, and also some Q&A as well, okay, if there are any questions to be answered. All right, so this and more in this live trading session. Traders, those of you joining in new for the first time, Mr. Naupan here, founder of Master the Markets Illustrious Conference and the Traders Open Day. So, without further ado, let's go and take a look at some live trading potential trades before we start to take a look at the topic for today, okay, which is basically on the federal rate cut risks, sell the news, okay. So we'll analyze that a bit more deeper very shortly. But before that, let's go and take a look at the markets. One thing that I did look at, and I'll take this through quite slowly over here and analyze this. We did have a position on this a bit earlier. I'm just going to show you all of that and what we did as well. And let me, if I go on to the daily, I'll start off with the daily over here. So the first thing what we usually do, traders, is before I look at a trade opportunity for a particular instrument, I look at the range for today's bar, okay? And when I took a look at this range over here for this bar, now let me show you here. Now that was about 52, was it not? Yeah. So yesterday's ATR, if you can read from here, right? If I hover my mouse around this bar, that's about 81, isn't it? So 80% of that, that's about 64. But look at today's bar range, that's about 52, okay? That's my first premise. Now, after I take a look at that, I know that there's a bit more range to happen, right? Because there's only 52 and 80% of the average range, that's about 64, right? So there's about 12 more to get to. Now, before the news, of course, there was much more. This bar was much more smaller, and that's how we took the trade on that particular opportunity. I'm just going to go through that as well with you guys, okay? So on this, what then happened is that, so that's the first premise, okay? The range hasn't formed. Then what we then do, we then take a look at the trends, okay, across all the different time frames. Now, what is different here at Master the Markets is that we have, if you look at the arrows and the dots, right? This is on MetaTrader. You can see that we've quantified what a top and a bottom is, okay, using formulas that were designed back in the 1960s, okay? If you want to find out more about that and go into a bit more depth, I would highly encourage you guys to check out www.7stepstoctp.com, okay? 7stepstoctp.com. I'll give you all the reference links later, just hang in there. Now, after that, you see, if you take a look on our TradingView channel as well, you can see that over here on any time frame, it tells you, right? It's all marked out over here, okay? All the bottoms and tops, okay? Over here. So let me use the MetaTrader for now, and then we'll analyze the tops and bottoms. So by having the tops and bottoms quantified, what we got is a market structure that is quantified and not subjective. Because if I were to remove the tops and bottoms, then this entire thing becomes very subjective. Some people might say, you know what, that's a top, that's a bottom. So for example, let me show it to you here, right? So if I were to do that, I'll just purposely use candlesticks here so that you guys can see it more clearly. I know some of you have some feedback. And you can see that if I remove, okay, our quantification here. So you see, now what would we say this is, right? Everybody watching in here, or even in a classroom of 10,000, 20,000 people, everybody would say different answers, isn't it? Some people might say, okay, that's a top. Some people might not agree. But even then, even if you say that's a top, because you're looking at all this already, back in hindsight, right? But in real time, how? And some of you might say that's a bottom. Some of you might say it's not, right? Some of you might say this is a bottom. Over here, some of you might say it's not. Some of you might say, okay, that's a bottom. So when it gets so subjective like that, and here you might say this is a sideways movement. But you see, traders, when it gets so subjective like that, then how do you draw any conclusion on what the trend of the market is, right? A lot of people talk about trends. Now, if you don't have your lows and highs to be compared, then you can never say what trend the market is in, is it not, right? So then, what then the quant traders did back in the 1960s is that they quantified what a top and a bottom is, okay? So when they took a look at that over here, now I can see, right, systematically and quantitatively, you see over here on our trend box, it tells me this is an uptrend and it's a phase 2. Now, why is that? Because a trend can only be determined by the cyclical movement, isn't it? Only when there's a cycle, then I can compare the highs of the cycle to the previous high. And then as long as it is higher highs and higher lows, then we will classify that as an uptrend. Now over here, at the moment, then what is this, all this phase 1 and phase 2? Now the phase 1s are the ones that are in alignment with the trend, right? There's the P1s. And then this one here is the counter trend, okay? The phase 2, okay, that goes against the trend. So you always define your trend first, and then after that, see whether the phases are in alignment or going against the trend, okay? Going against the trend is phase 2. Going in favor is phase 1, okay? And then it keeps repeating, right? So that's your phase 1, that's your phase 2, as long as the trend remains intact. So this is what we got here, right, across the different time frames. So you see, because I've quantified that, we have quantified here at Master the Markets, then you can get that much more easily. Let me put this into candles as well. So I collect all of these trends and phases into one table. Most of you who have been following us for quite some time, you would have already seen that by now, right? Which is called the trend alignment and direction alignment table, okay? So even over here on the 1 hour here, you can start to see that again as well, okay? It's an uptrend phase 1. So now once I've collected all of this over here, so let me do that here, and then you can see over here, that's the GPUSD over there. So I've collected it all from the different time frames, okay? Straight away, it really is very clear to you right now, they are all in an uptrend, okay, at the moment. They're all in an uptrend at the moment. Okay, that's the first part. So, you know, in terms of a bias, yes, we'll be taking this long, but then we need a bit more confirmation in terms of our direction bias by looking at other parameters. And the other parameters are in the other side of the table. Because in this particular strategy that we look at, even though the trends on all the time frames will be on the upside, but you know, on this intraday strategy, I'm just only going to be trading just for 1 day because I'm going to enter and exit within the day, right, traders? So then I'm more focused on also the bar, how the bar is forming. So to analyze the bar, how it's forming, so I go back to here again, to analyze how the bar is forming, then I take a look at this bar here, right? And I look at what we call the stretch principle. And the whole objective of looking at the stretch principle parameters is so that to decipher where is my bigger range from the open going to happen today, and then I trade a line in alignment with that direction, and then I combine the trend and the phases along as well. So according to that, we've got a stretch-based indicator, and a stretch was popularized back in the 1980s by Toby Crable, one of the big billionaire hedge fund traders. And in that, what we did was, if you take a look over here, we got the stretch indicator, right? So the stretch indicator here, you can see it's taken out the low, it's taken out the high, the green one, yeah? The green dotted ones over here. So it's taken out both, but the latest one was to the upside, all right? So that's what we got over there. Now, once we got that one there, then you can then see that after we got that one there, you can see that that's also to the upper stretch. So I can put that also across over here, and you can see that, okay, that's towards the both, but latest is the up one, okay? So it's still pointing to the upside. And then the range lines we take a look as well between certain timings, and that's also pointing to the upside. Bro to ST at the moment, it's moved up to the upside also. That's a ratio we look at. And the previous daily high to previous daily low, that's showing to the downside. It's taken out yesterday's bar's low. Other than that, you can see that now very clearly across 7 parameters right over here. I can see all is pointing to the upside, okay? Only one to the downside. So then I form a bias, which is towards the long side, okay? So that's what this table is about, right? So I've got my direction bias now. After that, what you guys then do is, then you come and take a look at in terms of your timing. Where do I want to get in into here? Now, before the news did come out, we did see a viable opportunity. We did put an entry on the high of this bar after it was retracing here. But then in the news, you can see the big spike that happened. That was good. It happened in our favor. Some of you who are on our Telegram channel would have seen that as well. But our stop was for the low of the news bar, right? And then it took out the low of the news bar and then it stopped us out, okay? That's fine. Remember, I always will say that trading is based on probabilities. You can't just always think about 1, 2, 3 trades, okay? You got to look at the series of trades. That's what the Telegram channel is there for. Not as a pure signal service, but as for you to understand just examples of these principles that we're teaching you, and then to put that into your strategy for consistent performance. So here, over here, I can see there's another opportunity, highly probably coming back again if it does rebound back. And you can see the high volume over here. So if this closes up and then comes back to here. So now, in terms of timing, let me go back onto here on the 15-minute. Let me see the resistance point again that it's got to take out. One is definitely the high of that bar over here to turn this back up again, and then also the high of that bar there, isn't it? So let's take a look even on terms of a 5-minute. Where can I get a trend change actually happening? We can actually move it to the high of this red bar here, okay, and the stop being for here, okay. So I had to break it down because only the reason is why I went to the 5-minute is because when you get a big bar like that, you got to look at what's happening within that bar range activity, okay. That's why we go into those time frames. Now coming back again into here, so I probably got to take this on the Telegram very shortly. So then coming back into here, I will take a look at this once more. 13551, or if I want to look at coming back into the range line, I'll take a look at coming back into the same position once again. So probably we'll take it back at 3547 to start with once more and see if that holds, you know, and if that will be our last re-entry point once again. After that, we won't take the re-entry, okay? So this is up to, let me just take a look, traders. 1300, isn't it? So yeah, now this is the 1400. So this was until 12 o'clock. So that's fine. So over here, I will do this once more. So 3547, okay. Right, 13547, and we'll put the stop for the low here, 13523, okay, and we will do it 13577, okay, 1.3577, and we will submit that across, okay. Now, in terms of this one here, I will do the same one again here as well. We'll do it a bit more tighter. 13547, isn't it, is what I'm looking at. 1.3547. I will just take a look at 2.00, and then I'll do position size. That's very important, your risk management, yeah? So do position size accordingly, and I would do it at the stop being for here, 135.23, and then the target going for 35.77. Now, why the target is as such? That's to get to my 80% ATR level, okay? I'll take a look at time as well, whether it is able to fulfill it within that time frame, okay? So we'll see how that goes on to be. So that's what we got here on cable. I've sent that through the Telegram channel as well. This is our second position. Our first position did get stopped out. Some of you on Telegram channel would have seen that. But now we will re-enter this if it matches up. Now I'm going to quickly double check the volume as well, done by the Trade Guider and their team over there, headed by Gavin Holmes and his team. Now you can see that I just need to put this across them. I will put the Pro I already have. Yeah, the RV is what I need. I don't know why that got hidden just now, but yeah. Yep, that's good. It's much better. Right, let's take a look at this. The volume, big spike over here, of course, because of the news and everything. And then you can see that really stopped everyone out, including us as well. It didn't really sustain through that level. Maybe we should have put it a bit more conservative or waited for the news to finish. But sometimes, you know, you can always say that in hindsight, but this could have happened in the other way where it could have just gone up all the way and hit our target as well, okay? That's one. We just got triggered. I just saw that. But you can see that after this news over here, you can see that's a immediate reversal that has happened over here, okay? That you can see over here. So we'll wait and see how that turns out to be. Immediate buying pressure. We have to see if that will sustain. That's what I'll be taking a look at, okay? That's that one on the 15-minute time frame as well. Immediate reversal after that red seller bar over here, okay? And then in terms of the VSA light as well, okay? So I want to take a look at the VSA light over here as well. What are the dots that it's saying at the moment? It's a bit gray at the moment, isn't it? That's what it's got. Gray is still fine. Let's wait for it to see if it moves to the green side, and that will be perfect for us, okay? We want it to be green rather than gray, okay? So the volume is matching if this sustains its buying pressure, okay? So that's what we will be taking a closer look at. Now, coming back into here to see what we can do on the stop side of things. Now, that's the most we can do that can be on that side. If it does take that range line up and move further north towards our target, then we can look to get a bit more aggressive on it, okay? So let's see how that goes. I'll give this another 30, 40 minutes. I'll keep an eye on this and we'll see how it goes. Because if this is real buying pressure, traders, the price should move, okay? After this, it shouldn't play around anymore. It should just keep going up towards this range. If it doesn't, then that's a warning signal, okay? So we'll keep an eye on that. We'll see how that plays out to be, okay, on that particular trade. Now, in terms of the other ones, let me take a look over here. So here, in terms of DAX, this has already did its range. I think I did take a look at most of them. Gold has turned around. Let me take a look at this one here. $47. This is 40, isn't it? I mean, it hasn't done its 0.8 times 47. Let me take a look here. Let me move this to here. I'll just take a look at one more of this. 3760, isn't it? Has it done it? Yeah, it's gone down about 3717. Perhaps there's a little bit more move left on this. Let me just quickly scan through the 4 hour, maybe a bit more lower open equity on that. 1 hour, that's on the downside over here. You just confirm that. It's going to be wary of that one. And on the 15-minute, that's an uptrend phase 2 as well. Okay, so a bit of a mixed signal there. We'll wait and see how that plans out to be, because when I took a look, I mean, the only one that was really setting out most things was the cable trade. So that's that one there, traders. So I did get a test on this again. So if it does do on the 15-minute, if it does confirm it, what we can do, take a look, is taking towards a smaller target. That's another thing I just remembered I could have done on GPUSD before the news, is take it towards a smaller target rather towards the range. Have two targets. We could have taken one towards a smaller range. When I talk about the topic about the Fed rate cuts and about selling the news, I'll talk about this more in detail, okay, what you can do. Right, now on this basis, on gold, let me quickly fill up this table. I just want to get an idea about this. So this is, we got an uptrend phase 1, even though very low open equity here. A lot of people are thinking about that it will find its top. Always follow the price, traders. I would refrain from taking shots on gold unless you've done your testing in terms of mean reversion strategies, and carry on and do that. Okay, don't just jump in out of impulse and not a clear plan, because I know so many traders who just trade strategies even without testing them, without understanding them, without understanding the numbers, the drawdowns, how they will work. They would just give it a go straight away on a real account, and then when the losses come, then they get shocked. The worst thing that can happen to you is when you just trade a strategy blindly, and then the first 5 to 10 trades are all winners, and then you think that you've hit the holy grail, and then you keep increasing your position size until it shocks you. So you don't want all of that, yeah? So have your rules all clearly written out. We go through that quite a lot in Traders Basecamp package as well, okay? So you can check that out as well. I'll give you some reference links later. On the 4 hour, you can see that there is an uptrend phase 1 here as well. Also, I would say a bit low OE there. Low move left, that's what I mean. OE as in open equity. I'll give you the reference links for 7 steps to CTP to look at that. In terms of this one here, so downtrend phase 1 is what we got. And this one is uptrend phase 2, wasn't it? The 15-minute time frame. Okay, good. So at least across 3 time frames, we got an uptrend. Let me analyze the bar mechanics. Now, the bar mechanics on gold is upper stretch. So both has been taken out. So you can see over here, it's quite clear. Let me minimize this. So this is quite clear. Taken out the lower stretch, taken out the upper stretch, right? At the moment, it's testing the upper stretch at the moment. And that's what it's doing. So what I will do is both. I'll say both, but latest is upper stretch. Range lines wise, what has it done? Let me go on to the 1 hour. And in terms of range lines, right, so let me do the range lines here. Okay, that's definitely the low there. Let me just do 11 to 12, isn't it? So that one there as well. Okay, so let's see if it breaks that. It definitely did break the previous range line. So I would say in terms of gold, Latest upper range but 8 a.m. Okay. Only and then bro to ST, yes, is to the up, is it to the upside? Yeah, more or less. Let me just quickly check. Um, yeah, so even if it did that, yeah, it's more to the upside. Okay, just did some calculations there. Yes, previous daily high and previous daily low. It's taken out the previous daily low. You can see over here, right? You can see it's taken out that low over there. So I will record that down to over here. Okay, and okay, so this one is still no. It's not done its point ATR just by about $2. It hasn't done it. 37.60, isn't it? No, by just by 50 cents, really, to be honest. So when I take a look at all of this, so you see traders, before you enter a trade, but remember entry into a trade is only one out of the 5 components, okay? It's only one out of the 5 components, entry. And yet a lot of people just keep focusing on entry alone, okay? But in terms of entry, when you're taking a look at an entry into a trade, you're looking at two things. One is called direction bias, and the other thing is called timing. Okay, so when I take a look at all of this over here, you can see that across here, across the 3 time frames, yes, I'm having a trend correlation, uptrend. And in terms of the bar mechanics, most of it's pointing towards the upside. So it's about 6 factors here. 1, 2, 3, 4, 5, 6 to my side to account for my bias, which is towards the long side. Okay, so that's how we form the bias over here. Okay, so that's what we got over there in terms of the bias. Now, in terms of timing, how will I enter this particular trade? At the moment, this is in a downtrend phase 1 on the 1 hour, right? So how will I enter this particular trade? I'll wait for a trend change on the 1 hour, or on the 15 minute, what I would do is wait for my bottom to confirm. So what I will look for, because we got this framework, right, on the SMI, so I'll wait for this bottom to confirm with a dot whenever the dot happens, okay? Maybe on the next bar, maybe on this bar, I don't know. But when the formulas get fulfilled, then we can enter then on the close of the bar, okay? So that's what we will be taking a look at, traders, okay? In terms of in terms of gold. Once we get that, because the ATR range, the 80% ATR range has been formed, so we'll take it towards a very short distance of just 1 ATR only, okay? So I'll wait and see how this one comes along, but yeah, I'll keep that on the 15-minute time frame. In terms of volume as well, yeah, it's all spiking around here, so wait and see how that bottom holds, okay? That is also the power of confirming and quantifying what these tops and bottoms are over here, okay? That's the whole premise of the quantification of your tops and bottoms. Now, the other thing that you also get out of the quantification of these tops and bottoms as well, traders, is that if you take a look over here, in terms of, so cable is still holding it there, so we'll wait and see how that performs in terms of its buying pressure. Now, when I go to here, when I take a look at gold, I'll take a look at the volume as well. So let me take a look at the volume for gold. So let's take a look at this one here. Okay, good. So, right. So when I take a look at this, you can see according to the trade to win package, there's no demand bar, but because of that, of course, we don't sell anything. We look at the entire picture, just like what me and Gavin will always say. Let me just delete that one and put a new one over, because we just had a new upgrade to our SMI indicator. So over here, I can see that the main volume spike happened around here, as you can see, right? And then after that, you can see there's some decreasing volume there, saying that the sell-off is not really justified, but we need a bit more confirmation, okay, to see which one is true. Is it this buying pressure or the selling pressure that came, okay? And the main critical one I will be taking a look at is for the seller bar to be reversed, this high of the seller bar. Then the next one is for this wick to be taken out as well. So wait and see, and if the SMI confirms or not as well. So then after that, then we can look into this a bit more closely. But in terms of the volume, it's fine. It's a gray dot, that's okay. As long as it's not a red dot, that's fine for now, okay? So we'll wait and see how that plans out to be. Now, a lot of you have been bugging me for the reference links at the moment. So let me take a look at that. Now, let me give you the reference links. Those of you who don't understand the terminologies and all of that, the first place to go to is 7stepstoctp.com. Okay, this is over 15 years of collated research. So go over here. So what you can do is once you've typed in that URL, you'll land on this page, and the CTP refers to consistent trading performance. Okay, and once you put in your details and your number, click on a robot and click on the green button, then you will get this page over here on your email. Straight away you will get it. It's all the 7 videos, okay? And you can watch through each one of them. Now this is very powerful because this is taught in terms of principles and frameworks. So this framework you can apply to any market structure, any instrument, doesn't matter. It's Saudi stocks, India stocks, China stocks, US stocks, doesn't matter. Or UK stocks, doesn't matter at all. So you can put this framework, what you've understood from here, and also onto any strategy as well. And along in conjunction with other tools, you can only get stronger and your clarity becomes more stronger as well. All the clients that we have taught in terms of volume and price have all been blown away when they've gone through the 7 videos, okay? So highly encourage you guys to watch these things in your own time. Each video is about only 10-15 minutes. The other thing, it's our YouTube channel. Our YouTube channel, youtube.com/master the markets, right? So once you are there, hit the subscribe button. And then if you want to get notifications when we go live, right? So click on the all bell icon. Okay, that's the other thing that you need to do as well. Okay, so let me just quickly refresh that. And then you can see the other thing that I wanted to mention to you as well was the stretch principle videos. Okay, so it was over here. I don't know why it's not showing up here, but maybe because YouTube is always changing things. But you see, when you click on view all, it tells you, see the stretch principle here, right? So definitely watch that when you can on the stretch principle. That will give you a bit more understanding. Now, the other thing is, whenever we go live, right? So whenever you want to follow us, you can then click on the live stream over here as well if you want to catch the replay. Because you've hit the all bell icon, even if you're not able to join us live, you can always go onto the live section here and catch the recordings. Because after we come offline, then this will be immediately on YouTube. You can immediately start watching it. Okay, that's what's going live at the moment. And all our previous lives, you see so many that we have done. We've taken so many in real time. Okay, you can check that all at your own free time. There's so many trades, you know, where it races straight away to the stop loss, or some which come so close to the stop and then revert and then goes up fast towards the target in terms of the gold trade and all of that. So you can watch all of that over here, okay, on the channel over here, right? So many really good topics over here. So the reason how we do this is, and I think the way you guys should approach it is that you should look at 7 steps of CTP first, get the right framework first, and then to see how the framework is going to apply in real time, then you can go through some of the live videos over here. Okay. Now, some of you have gone through it, are sitting on the fence about getting the indicators onto your screen. And you can go onto this page called SMI and VSA, and you can take a look at that. SMI stands for Smart Money Indicator, which is by Master the Markets, and then VSA is by the Trade Guider team. Okay, so once you put that onto both of the screens, you will get something like this over here that you can see all the things happening. Okay, you can have it all there, and you can have a clear picture of what the market is doing. So far on cable, so far so good. Let's see how that one plans out to be. I think we got the position running around here. We got at 2 lots, and then even gold is on the upside as well. We might take a look at gold in taking this particular trade towards just the 1 ATR target as well. Okay, so I'll come back to that in a minute, and I've got a topic to finish off as well. So quite a bit to do. So, so you got that. That's the SMI and VSA, both the indicators over there. And then in terms of quick shout out to Trade Nation, they are the ones who are sponsoring us on the Telegram channel. And that's how we're pushing out all the signals through Telegram channel for you guys. And also, if you want to open up a Trade Nation account, you can find the instructions over there and open up a Trade Nation account as well. Their spreads are really, really tight. Customer service is amazing as well. So definitely do check them out. Now, the quick thing, what I did want to mention about another thing about the smart money indicator, which most of you love it, and you keep on being a client with us. I mean, most of you all usually, once you join us, you're with us for over 10 years, because we are the only ones that give you the probability stats on how much move is left, and also like in a very systematic, structured way. And over here, in terms of the smart money indicator, not only does it tell you the trend because of the cycle quantification, it also tells you the different stats, right? How much move is left on a probability basis. This is what really blew a lot of traders' minds, and we got then invited to many prestigious places like the STA, Ninja Trader, and then got interviewed by many other top traders as well. Okay, IG Index also invited us to come and do a talk with them as well. So quite a lot. We got a lot of viewership once we published this. So let me show you what I'm talking about. In terms of ATR and pips, you can see on a glance, I can find out for the phase ones on this time frame on the 15-minute. If I put a 1 ATR target, that's a 65% probability, right? Just based on just ticking on the dots, okay? Now, if I do combine other things on top of it, then highly probably the probability will increase, but that you have to test, okay? And you can see. Right, so that's that one there in terms of the OE numbers. Not only that, you get 2 more stats as well, very powerful. The MAE one, which tells you on the stop losses where to place your stop loss. I was talking to another client from Australia yesterday, and he said the MAE, once he put the MAE stats onto his trades, he got so confident, even when the trade goes against him, he knows that there's a 95% chance of not being stopped out. Okay, that's on the MAE. The other thing then is the time too as well. How long does it take to get there towards the target? Okay, so that one is all there, and all this is explained thoroughly on 7 steps to ctp.com. Okay, so that's that one there. In terms of the smart money indicator and what it can do and the framework, okay? And you can use all these numbers towards any strategy. So definitely go through this videos over here. Right, so that's what we got over there. So I'll keep an eye on cable and gold, okay? So gold, let me see if we can, doesn't look like, showing a bit of weakness, still another 5 more minutes. We will wait and see if that confirms or not, okay? If it does confirm, we can take a small position on it. So let me just get maybe prepared on that, a bit ready. I won't be able to position size accurately. That's why I always say as well, we need more people on the intraday team. Those of you who are interested in learning more about this, do get in touch with us at at mastermarkets.net, okay? So that one there. So here, so let me see if it does confirm. Let's just say for the high of that bar, and that one, say, maintains that bottom there. But if I do get in there, I'm just going to take a look at the 1 hour structure. Looking at this, taking out that high to do a trend change there is what I'm looking at. And if I'm taking a look at just the 1 ATR number, that'd be much more smaller. I don't think this is going to confirm. So I am looking at $6.05. Okay, that's what we are looking at. $6.05. 3660.19. Okay, so that is what we are looking at. We can just say 3660 and we can do that. Okay, still 4 more minutes, so we'll wait and see how that comes along. As we are waiting for that, what I will do is I'll go to the topic for today, and if there are any questions as well, do definitely put it into the chat box. Okay, I'll give you all some time to then type in, or those of you who just want to put some comments, you can also type in what is one thing that you have learned so far from what I've just talked about, okay, in terms of the smart money structure, the volume, times of trend quantification, all of that. There's one thing you took away, what would that be? Just put it into the chat box. Okay, good. Now, I will take a look at that later on. Now, let me go on to the topic for today. So the topic for today, let me bring that up in front of me. It's going to be federal rate cut risks sell the news. Okay, what does it all mean? So for those of you who doesn't understand what rate cuts are, okay, so what does that mean? A rate cut, when you talk about rate, the Federal Reserve Bank, the main thing that you look out for when the Federal Reserve Bank minutes come out, which is called the FOMC, right, minutes conference. So when you take a look at that, the main thing we really look at rate cuts is the interest rates, okay? The interest rates do the bank, right? The US bank, what the Federal Reserve is going to do, because the Federal Reserve is the central bank that then lends out money to the other banks out there. So that's how the whole chain, the money supply starts to happen. So when you take a look at that, so we usually, most traders and investors will take a look at what is the Fed doing? You know, are they reducing the interest rates or increasing? Now, the interest rates got a two side factor. Okay, one is that if interest rates right are low, then it makes borrowing more simpler. Okay, borrowing more easier, isn't it? Because when you borrow, when you want to pay back someone, if the interest rate is very low, then you need to pay them back much lesser plus the capital, right? But on the other hand, when interest rates are high, borrowing then reduces, okay? So that's one thing in terms of reduction of an increase of interest rates on the borrowing sector. Now, on the other hand, in terms of if let's say your money is just lying in the bank account as a saver, right, in a savings account, or as an investor, you just put it into the bank account. When the interest rates go down, that's not good for you because then you're getting low return on your capital, right? Return on investment. Okay. However, when the interest rates increase, then there's an increased ROI. Okay, right? So, however, so these are the two side points over here. So I'm just taking a look at gold. It still hasn't confirmed. So we still do not have a trade on that yet. Okay, so we'll wait and see how that plans out to be. So I'll keep an eye on that. I'll keep an eye on the other one as well. So when interest rates go up or down, so it affects either the borrowing or the investment cycle. Okay, so in terms of that, so let me just take a look. So cable is still on the rise. I'm just taking a look on that. So that's still on the rise over here. So we'll wait and see how that plans out to be. Okay. Okay, good. So now coming back onto here, right, where was I? Right, I was on the gold chart, wasn't I? So let me go back to the gold chart just to keep an eye on the gold. Okay, good. So so that's first the interest rate explanation, okay, and how it affects and everything, okay, the borrowing as well as the investment side. What is interest rates? Now, second thing, now why is it so important, right? I kind of touched on it, but let's take a look at this, right? So as I said, in terms of when it reduces, okay, when the interest rates get a cut, let's say there's a rate cut, okay, and why would they do a rate cut? There's only two levers that the Federal Reserve plays on, okay, for the whole economic cycle to happen. One is if the inflation is quite high. What do I mean by inflation? Inflation means that means the prices of products are going very high. Okay, that means, in other words, what it's saying is that what $1 can get you in terms of a product is going very low. That's the final effect of inflation. Okay, it's like, to give you a nice example, if you talk about back in the 1960s, to get a taxi ride or a cab ride or a bus ride or a train ride was much lesser, wasn't it, right? So your £1 or your $1 can go a long way, right? But today, I mean, you can't get anywhere with £1, especially here in London, right? So that's what we mean. So when inflation happens, okay, the value of the dollar, or any currency for that fact, starts to reduce because it's not able to go that far. Okay, so now to reduce then inflation, what they would then do is increase interest rates, okay, curb down on the borrowing, right, so that the consumer spending will go down. Okay. However, on the other side, when they do rate cuts and everything, right, what they are really actually doing is that they're encouraging borrowing to happen. Okay, borrowing to happen so that then the economy can then move up. Especially if you take a look, traders, very big companies, right, very big multinational companies will take some borrowing, okay, from the banks to then expand their infrastructure, innovation, marketing, all of those kind of stuff, recruitment and all of that. So to sometimes boost an economy, sometimes they do rate cuts to bring it all the way back up again. Okay, so that is the whole idea of why they do rate cuts, okay, or increase the interest rate, okay. So far what we are seeing is that when you read between the news lines, there's a high chance that there's going to be a rate cut this coming next week on the FOMC minutes. Now, what will that do? So you see, what will that do in terms of currency, stocks, equities, and all of that? In terms of, people tell you like, oh yeah, just sell it. If there's a rate cut, just sell it. We have to analyze this a bit more deeper. Now, if you see, if there's a rate cut, right, one thing is, from the savers, from the investors' point of view, in that currency, let's say now the dollar interest rate has fallen, isn't it? That means you get less for your 100,000, let's say, in your bank account. Instead of getting 5% interest, now you're only going to get 2% return, right? So it's dropped. So what usually then will the effect is that people will then take out from dollars, sell the dollars, right, 100,000, change it into another currency, where then let's say that the interest rates are high. It's called carryover whatsoever. This is why then you get massive sell-offs on the dollar when the rate cuts happen. Okay, immediately on the news. Now, on the other hand, okay, on the other hand, in terms of equities, because they're now selling the dollar and they need to put it in somewhere else, and also borrowing has now been encouraged. Remember, I talked about that, because when it's lower interest rates, borrowing is more encouraged. Then what will that do? That will then increase consumer spending and also investments into corporate structures and all of that, right? So when that happens, then the stock prices, equity prices can go up. Okay, so why is that all important? Is for this, because it's how we can affect all of this different multi-assets and everything. Now, that is good on the what and the why. Does that mean that just because we saw that it's sell the news, then we just jump into selling the news? Definitely not. Okay, that's where all the retail traders will get caught out. So what you have to do, traders, is on the how, right? So how do you take advantage of all of this? Okay, right? So the first thing I did want to also tell you is that when people say actually sell the news, most people, before the news actually comes out, have already factored that in. Some of the selling might already occur. So sometimes on that day, let's say on that Wednesday next week, when the news comes out, hey, do you know what? Let's assume that if they say that the rates are cut for definitive, you might suddenly start thinking that, hey, you know what? With all this explanation and understanding, now I know that it should drop. Now let me short the dollar. let's do whatever it takes and let's put a big position size on it. Suddenly, to your shock, you start to see a big upsurge, uprise, okay, on that. Now, what happened? Why did that happen? You might ask, right? And then you may get caught up. Traders have been in these positions. And it's because one of the reasons they say is because the selling has already been factored in before the news. And then when the news comes out, then it's that's why they take it on the way up. That's one reason, right? But then on the other hand, even though some selling might happen beforehand, it can carry on selling even when the news comes off as well. But for how long is another question as well, is it not, traders, right? How long will it keep going down before it also bounces? Where should your stops be before getting stopped out? Towards your target point, towards your open profit? What is it? So all these things you got to be very clear of when you are trading on the how. Okay, how do you use all this news towards the your advantage? Okay, right. So that's what over here, like signal of weak liquidity trap risk, and that's another thing that can happen also, right? On why the rate cuts can be bearish. Okay, if cuts don't stimulate growth, and then the confidence then will drop as well. That's another thing that can also make the equities drop. Okay, if you don't see the immediate rise as well. Okay, so many factors to consider. So in terms of considering all of this, what will I say? How should you still trade it? I always propose a two-step process to this. Okay, the first thing is, rather than just trading just based on the news alone, yes, have the fundamental facts next to you. And when the rates are cut, usually, yes, on the dollar, usually you should expect a sell off. But what I will also do is that even though you may have a bias to sell off, but you then have your technical levels marked out, right? Just like I say, the news is always the fuel, the petrol in the fuel tank, okay? And the gearbox is what tells you the direction which is going to go. So in terms of the technicals, mark out your levels on when you want to go short, if you do want to go short, okay? And also then in terms of that, not only in terms of your entry, your stop loss and your target where you want to get out as well. Now, if you want to be a bit more conservative, right, rather than aggressive, very aggressive, what you do is that don't enter before the news, right? Enter 15 minutes after the news has settled down, okay, or even up to the next finish of the hour, maybe. Let's say the news comes out at, let's say, 7:30, then wait until 8 p.m. Okay, that's another thing you can do. So wait for the settling down period. Okay, wait for the settling down period, and then look at your technical levels, and then make your informed choices on where you want to get in and where you want to exit if it's within the day. Now, if you got some swing positions just like us, on live trading room and all of that we do for all our paid members, then what you can then do is just leave it because you've already factored all of that in already into the your whole trading strategy. So that's what I would say, on the Fed rate cuts, on selling the news, etc. Okay, so just as a recap, what did we go through? We went through what are the rate cuts. Second, why is it important? We went through that as well. And then third, we went through how you can also take advantage of it and put that into a trading strategy and apply it. Okay, so this is what I would say would be the three main factors for around here. Now, coming back on the gold, still not getting a confirmation. How is cable doing? Still holding on to its buying pressure over here, absolute reversal here. So wait and see how that turns out to be on cable as well. And the last things what I did want to mention to you, yes, upcoming events and any questions. So I've got some questions, so I'll tackle them shortly, and then we'll just wrap up. It's coming to the hour already. So the first thing, as I said, just a recap, 7 steps to CTP. You can get that once you put your details in. You'll get the 7 videos being sent to your inbox. Highly recommend this because over 15 years of collected research traders, the framework is very powerful as approved and testified by all our clients, okay, but over the last 15 years that we've been going on, all right? Master of the Markets has been going on 2010, since 2010. So look through all of this as well, look through all of these videos over here. They're quite short, 10, 15 minutes, so one a day, you'll be able to cover it. Other thing is the YouTube channel, youtube.com/master the markets. To get notification when we go live, after you click subscribe, click on the all bell icon. Okay, so that's what you're going to do over there. In terms of the must watch section on the home, if you go under here, look at the stretch principle over here. Okay, so that would be very helpful as well. This one, STA talk, in fact, all the must watch ones are really good. We also interviewed the market visit Tom Basso. That was really amazing interview. You must definitely watch that. Another one is coming up as well. We'll be posting it soon. Stephen Goldstein's one on psychology. Phenomenal interview that we did with him. Watch out for that coming up onto our YouTube channel as well. The other one is also, this one is a really good one as well. It's a nice classic 11 interviews that we did. We got invited 11 times by Ninja Trader. Those of you trading on the future side of things, you know Ninja Trader. It's a big broker with 1.5 million traders on the database. So when we did an interview with them, our interview actually went viral. It hit 25,000 views in just 1 month, right? Really outbeat every other talk over there, okay? So definitely watch that. There's about 11 of them. They are really quite good as well. And it will go through in a very systematic manner. And the interview was really done very well as well by Tom and his team and Jim and all that. So those are the reference points. I would say subscribe and hit the all bell icon, and under the live section you will see all the live trades that we have taken. Those of you guys who want to get both the indicators onto your screens, go on to SMI and VSA page. There should be a link over there to get on there. The last thing I did want to mention is the ETM Summit, right? The annual summit. The annual summit is coming up. It happens once a year. We've had a really great response. We started off last year. We were doing it online. It was based in Tenerife. Some of our traders flew off to Tenerife as well. And we did a nice live stream. And that happens once a year. This year, we're going to do it in person as well as online. And that's going to happen in Westminster, London, okay, overlooking the nice Thames River. We're going to be covering live trading on Friday, and then plus also some research updates and how you can also then construct a strong strategy together, okay? All the principles. This will be very powerful. You will meet some of the greatest minds over there. Some of our traders have been asked for over 10, 15 years, so passionate, so determined. Gavin will be there, I'll be there, Trade Guider clients will be there, Master the Market clients will be there. So it's an incredible opportunity, okay? So this is where it's all happening. If you want to go and read it, you can go and read through it, why it was created, what are we going to be doing there, all the different stuff over there, okay? In-depth price and volume analysis and points and principles. So really, really good. Amazing networking opportunities. Some of the guys who are coming there, I mean, they just blow my mind. Some of the things that you're seeing even on the trading view and all of that at the moment, all these indicators that you're seeing was all designed by our clients. It's a perfect example of the community itself uplifting itself, you know. So you will meet some of them there. Some of them are flying in from other countries as well. So that would be really, really great opportunity to network and see each other. Also, over the both the days, there will be also lunch provided, as well as on the first evening there will be dinner as well included. Okay, all in your ticket price. So all will be in there. Okay, there's a couple of last minute just discounts still available, so you can use that as well along with the ticket price. Okay, we only got a few more places on the in-person. There's only about 2 or 3 places left, so that'd be great. If you want to come and meet us in person, that'd be good. And then the online, yes, there's still some good online spaces left. Okay, so that's on the ETM Annual Summit. We really look forward to seeing you, me and Gavin, on that. And the last thing I would say is just a nice quick shout out to Trade Nation as well. Okay, thanks to your Telegram signal that we got our Telegram signal, that you can get all the signals on Telegram. Remember, another thing that I do want to mention in terms of Telegram is that it's not, I mean, it's not, the whole purpose of it is not purely a signal service that we keep giving you signals. Remember, we are strong believers in thinking that it's just not about, you see, traders, it's just not about we giving you the fish. It's about you learning how to fish as well. Okay, that's why we always teach in terms of principles that you can cross apply to any strategy for consistent performance. That's how it should be. Okay, and remember also that, you know, we only run that signal thing only between 1 to 2 days for only like what, 1 to 2 hours. Based on that, you can't really understand the strategy performance or gauge the strategy performance, okay? Right, so that's not how it should be. Even if he's got 7 winners in a row, 8 winners in a row, or 3 losses in a row, that shouldn't be the way how you gauge strategy performance as a true professional trader. All right, trading is based on probability, so you should always be known through a series of trades, and also you should always know your drawdowns before you start trading any strategy. Okay, so all that is very, very critical. Right, traders, I guess that's pretty much that from me. I will keep an eye on this cable trade, on how it goes. So far, good. Let's see if it takes out the high. That's a critical level over there that I'll be taking a look at. So far, it's on the positive side. That doesn't mean anything until we exit the position, okay, until we realize the profits, either in terms of target or in terms of your opposite confirmation bars. Right, traders, I guess that's pretty much that from me for now. I'll leave you guys on this page on the ETM Annual Summit. Looking forward to seeing you, many of you there. It's always great to see people in person. It never matches it, I guess, than in person. Okay, I mean online I know we got quite used to it after COVID, but in person, once in a while, once in a year, this happens. Great opportunity for us to also inspire ourselves, re-energize ourselves towards also the new year as well. Okay, traders, that's pretty much that from me on this live trading workshop. We will manage the trade on the Telegram channel, and as we always say, until the next time, stay disciplined, follow your trading plan, and keep trading like a master. Take care and bye for now.